And if that happens, we will see a corresponding move to the upside in gold. Silver could definitely be under more pressure than gold. I favor gold over silver. I think that the economy, given that we put some sort of handle on the pandemic, because that's the big contingency, will continue to grow. I think that as they start to raise interest rates, they're raising, as they raise them, they're raising them in very small increments, 0.25%. So it shouldn't have a dramatic effect on slowing the economy down. But if you get a combination where you continue to have this number of cases on a weekly basis globally, and you have interest rates going up, that could slow the economy down even more. The Fed got it wrong. They underestimated the pace at which the inflationary pressures would grow and how persistent they would be. Now that they're acknowledging the fact that we have persistent inflation and taking out the word transitory, they are, in my mind, chasing inflation. In other words, they're reacting to the inflationary level rather than being proactive about it. And that, to me, is not what the Federal Reserve is supposed to do. They're supposed to anticipate and then execute a plan, have side plans or plan B and C in case it does this or this. But it really took them off guard, I feel. They just didn't see this coming. And so it's forced them to make a total of 6 hikes in a period of a year and a half. And that is rather quick. Now, they're subtle hikes. They're 0.25%. But nonetheless, I think they're reacting a little bit late. They should have had done something prior to this and acknowledged that inflation was getting out of hand. They also left the door open for tapering timelines to slow down or speed up, and they left the door open for the number of rates. In other words, that's what they're penciling in. Mm-hmm. But if inflation continues to mount as they go through these steps, they might even accelerate the pace or the amount per rate hike. Mm-hmm. So they've left that door open, and it really illustrates how the Federal Reserve is acting or reacting rather than being proactive. Well, I think what we're going to see is, without raising interest rates until the middle of the year, if inflation continues to spike higher, you will see gold react to the bullish side. If inflation stays the same or moves down as they go through the tapering process, then you're going to see it still remain range bound, even move lower. This has been more than any year, and I've been doing this for 35 years, a headline-driven market. Markets move on a fundamental basis, they always have. But it is the headlines that tend to jerk the market around so violently, and we have gotten a lot of very interesting headlines this year. If we get that same kind of action next year, we could have that effect. Overall, I'm neutral on gold. I think that it could trade under pressure, with the caveat that if inflation continues to tick up and tick up higher, eventually you'll get some dollar weakness and you'll get a push in gold. But it's going to depend on the inflation rate. The reason we've had such a strong dollar is the fact that yields were so low on U.S. debt instruments began to tick up. And of course, that is bullish for the dollar. But we did have many cases in the last couple of months where you had the dollar and gold moving in tandem. There were more days, of course, in which you had the normal negative correlation. Gold moves up, the dollar moves down, or more likely gold goes down because the dollar is going up. We saw that a lot this week. But we could see a change in that. Again, it's all about what the inflationary pressures do over the upcoming months. That's what's going to be critical in determining where the precious yellow metal goes. But I think a lot of the inflationary pressures are derived from items that are going to stay high. Oil did come down a bit, but now it's moving back up. The cost of food is still tremendously high. Now, you might say, well, as far as food goes, they have to transport it. So if gas is high, hard to find drivers, you have those carrying costs, and that's what's taking food prices up. Food prices are mostly driven by demand, and China is the biggest recipient of our grains, soybean, corn, and wheat. And they're buying in huge quantities right now, and that is what's driving the market up. Plus, you've had some weather issues in the Midwest in terms of corn. But I think back in the 80s, I think it hit as high as 14% in 1980, maybe 15, just shy of 15%. But the interesting thing is it took them 3 to 4 years to bring it down to around 4%. And what that tells me is even if the Fed gets it right and they slowed down the rate in which inflation was growing to have it start to come down, this is going to be a multi-year, not a multi-month process. So higher inflation is going to be with us at least through 2024, not unless GDP is at 6 or 7% consistently throughout 2022, because that's where the money is coming in to pay these debts. We are not going to have liquidity problems. What we have is a debt problem. And unless we begin to resolve that, we will have issues further on down the road. And that's another thing that could be a bullish factor for gold. Right now, it's been under pressure pretty much since it hit the highs of 2088 in August of last year. It's been on a downward bias. And so I don't see that changing unless we get a fundamental shift in the root causes of what is taking gold lower. What I'm looking at is key levels. Right now, it's back under 18. If it breaks, say, 1755, it could go as low as 1700. If the dynamics turn and we get breaks above 1785, we could go to 1800. 1800 would take us as high as 1900. My top-end bullish projection for gold next year would be 1850 to 1900. My low-end projection, if it continues to have a bearish move, is got to be 1700 if it breaks 1755. You know, silver continues to go under pressure, could go below 20 if it continues to move the way that it has. It has typically been underperforming gold in terms of percentage gains on the way up, but most importantly, it's been overperforming gold on percentage gains lower. In other words, we saw silver break the lows of November 3rd. November 3rd is when gold hit the bottom. It was that last FOMC meeting. We hit a bottom in gold. Gold did not break that low till recently. Silver broke it about a week and a half ago, that low that it hit. And so silver could definitely be under more pressure than gold. I favor gold over silver.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
Do you want to know one thing about crypto? I made over 3000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where do you start? My name is Wagner and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really, really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.